is never too early to start talking about financial planning and money management, especially with teenagers.
Yeah, getting an understanding early is key, and teachers can help Chicago area students prepare for a good financial future. Here to talk more about that is Roy Paul with Sensibility. Thank you for being here, Roy.
Thank you.
All right, so let's talk about something that weighs on a lot of people, the financial impact of student loans. How can you still save and take down that debt that you might be carrying?
Yeah, it's a very good question because of course, a lot of people are inundated with student loan debt now. But I always encourage people to analyze the debt before they take it out. I talk to a lot of high school students who are going to college, which is great, and they're taking out loans to do it. And I always say to them, what is your monthly payment going to be when you graduate in 4 years? And they can't answer that question. So if you know someone who's about to go to college taking out debt, ask them, what is your monthly payment going to be when you graduate in 4 years? And if they can't answer that question, then that's their last homework assignment.
Yeah, it's like having some foresight and making sure they know what's down the road, right? Whether that's 4 years after graduation. So how do you talk about teens when it comes to saving money? So many parents say, teenagers are like asking for money all the time. ATM machines, as the parents might say, that they're ATM machines. So how do you get that conversation started with the teen?
Yeah, the first thing to do is to actually have the conversation, right? We talk to a lot of teens and they say, we don't even talk to our parents about money. They have no clue about the ins and the outs. And the thing is, every teenager has a goal. They want to buy something. They want to go somewhere. They want to do something with their friends. And if you say to them, hey, John, hey, Susan, what is it that you really want to buy? Now you've got a goal and they have an opportunity to work towards that goal. They have to earn money. They have to save over a period of time. Having the conversation and then encouraging them to have a specific goal in mind is the way to start.
Gotcha. Okay, and let's talk about this as well, something that's called the 50-30-20 rule. What is that?
Yeah, this is for teens, but also for adults as well, just in case there are people watching, and it relates to budgeting. The 50% is when you get your take-home pay, the 50% of your paycheck should be the things that you absolutely need, your rent, your car payment. The 30% of your check should be what you want. So if you want to go and take a vacation, for example, leisure activities, and then that 20% of your income should just be to savings. You do not touch it. Everyone always says, when I get a check, what do I do with it? The 50-30-20 rule is your guide.
How about credit cards? When it comes to credit cards and young people, how young is too young, and when should you actually get a credit card, and what's good and bad for using it at that point too for young people?
Yeah, I'm actually a big proponent of credit cards because it's one of the great ways and the easiest ways to develop credit. And what we often find is that oftentimes when you graduate from college, what do young people do? They move into a new city and they apply for an apartment, right? And if you don't have credit, it's very difficult to do that unless you have a cosigner, which a lot of parents don't feel comfortable doing. And so I say, take out the credit card. Just take out one. You only need one in college. And only put things on it that you can actually pay off the next month, right? So you're not buying $300 sneakers to put in your credit card. Maybe you go and get coffee. Maybe you're going to buy a sweater, something that's tangible that it won't cost you an arm and a leg to pay back, but you do need to start developing credit.
Right, or groceries, something like that, where you have the capital in there already in your checking account that you can pay it off. Roy, thank you so much for being here this morning. This is fantastic. Thanks a lot. Really appreciate it.
Thank you so much. I'm going to get another cup of coffee.
Hey, there you go. Sounds like a plan.
Thank you.
We've got all these tips and more information right at abc7chicago.com. That was a great conversation.
Hey, if you like that video, be sure to subscribe to our ABC7 Chicago YouTube channel.